2021 has been a marquee year for leading startups both in Southeast Asia and the global ecosystem as a record-breaking listings, spiking market valuations, and landmark deals have played their part to bolster the burgeoning tech sectors. However, these success stories have raised questions from soonicorns who are striving for similar success. This session aims to shed some light on pertinent questions and give those who work in startups an insight to the do's and don'ts of public listing. On our panel of speakers, we have Lauren Junique, founder and CEO of TDCX, Andy Tai, Managing Director of Goldman Sachs, Delano Musafir, Head of Capital Markets at APAC NYSE, and the moderator is Kit Wong, CFO of Ketcha Investment Corp of Ketcha Group. Everyone, I hope you have a great panel, and everyone else, please take notes. Enjoy this discussion.
Hey, everyone. Good morning and good to have everyone here today. So today, I'm very excited to have with us the it is the TDCX team, right? This is the team that, the first US IPO for a Southeast Asia company this year. There's been a lot of headlines around Grab and Krivo and all these big deals, but I think TDCX is the first company to be listed on the first Southeast Asian company to be listed on the in the US today, this year. And I think this is the team that made it happen. I'm just so excited to have everyone here. We have here Laurent Junique, the founder and CEO, who has built the business over 26 years, and we will hear a little bit about his story. We have here Andy from Goldman, head of South Asia, and the lead book runner who made this deal happen. And we have Delano, who heads up the Asia capital markets for New York Stock Exchange, which is where the company is listed and doing very well right now. So yeah, I'm very excited today to have everyone here. So without much more introductions, let me dive into it. So Lauren, you have been building this company since 1995. It's been a journey. We'd love to hear a little bit more about that journey, and also a little bit more for our audience in terms of how, we have quite a few soonicorns, unicorns, great companies here today. How do you think about the journey, and when did you think, hey, here's the right time for me to think about going public? What are the key considerations, and how do you decide to finally push the button this year to go ahead?
No, great question, Kit, and hi, everyone. So, I mean, the journey has been quite long, actually, 26 years, but we had to pick the right time. And I mean, every company is really different. For us, we went through different transformations over the years. We kind of reinvented ourselves up to the time of 2012, where we pivoted to become a digital support services organization, really leveraging the fact that digitalization was going to grow the business. So we had also experienced very strong growth over the years. We've been able to attract some of the biggest, largest new economy brands who need support in Southeast Asia to help them, for example, provide omnichannel CX solutions, to provide them with sales and digital marketing, to provide them with content moderation. And that's created a lot of growth for us, about 55% CAGR over the past 3 years. We had expanded our geographical footprint from being initially, a long time ago, just a Singapore-based company to become a Southeast Asian company, to becoming an Asia-Pacific player. We realized at the time that we needed then to become a global player, and that was very important to us. We'd grown to 13,000 to 14,000 employees now. So that was the first conclusion we'd made. We needed to accelerate our growth. We had in front of us a very large market opportunity, a fast-growing one. If you look at the business we're in, more and more people live their lives online. So there's jobs that are being created every day that didn't exist before, that need support, customer support and help. And that's the kind of work we do. I mean, this market is about $80 billion globally. It's going to become $100 billion in 2025. So there was a great opportunity for us to capture. And we realized also that, and we knew that for some time, that our competition and competitive market is fairly fragmented.
Oops. Looks like we may have lost Laurent for a few minutes. Hey, Laurent, you there? Sure. Hey, I guess while we wait for Laurent come back, I guess maybe Andy, what are the sort of key considerations as a company thinks about the right timing to go public? So I think one particular question they always ask is how big do you need to be to go public, right? Especially for South Asia companies listing in the US.
Thanks, Kit. I think that's right. And taking it back, multiple kind of considerations for companies if they want to list in US, right? Whether it be investors, domestic versus international investors, familiarity with the business, the sector they are in, what they're doing in the growth plans, listing requirements, liquidity, what does the business actually need the use of proceeds for. But maybe to help everyone in the audience here is the kind of the way to simplify things, the way to think about it probably is around the scale and size of the business, as you kind of rightly mentioned as well. I would say the rule of thumb here then in terms of a market cap, the rule of thumb would be to be able to access the US markets if your market cap is above 1 billion, so to speak. That's probably helpful because I think that guidance helps in terms of once you cross 1 billion, you're of a scale and size where investors really care about, and you're too big not to kind of be for investors not to look at you. So that's probably a good benchmark there.
So the unicorn status does matter when it comes to public markets.
That's correct.
Got it. Delano, any other sort of points that you think companies should think about? So Andy spoke about scale. Any other things like internal stuff?
Yeah, I mean, I totally agree with Andy in terms of a billion valuation being the threshold in pragmatic terms. From the NYSE perspective, our listing standards requires a minimum valuation, minimum market cap of $200 million on the day of IPO, and a minimum free float of $40 million. But we generally advise, as Andy said, around $1 billion or so minimum, just to get institutional investor interest in the first place. There's no profitability requirement in the NYSE, so obviously for tech companies that's attractive. I know there's no revenue standard either, so it's a very straightforward market cap test in order to be listed on the NYSE.
Got it. Just wondering if we have Laurent back. Not yet. Maybe we'll just continue moving on, and then when Laurent joins us, we'd love to continue hearing his story. Andy, you probably get a ton of questions, with companies and investors around the region about US as a listing venue versus a local exchange as a listing venue. And I think that discussion come a lot more since, some of the successful local IPOs, for example, Bukalapak, it looks like it had done well as well. What would be, sort of your views around this? Like what are, there's a few considerations here.
Thanks, Kit. So I think one, obviously we're fairly agnostic across exchanges, and companies, as we talk to, should think about it very broadly and want to kind of figure out which exchange works for them. So same things as they take a step back and kind of review, the benchmark scorecards here will be, in terms of is the ultimate investor base going to be more domestic driven or international institutional? And that ties to same thing from familiarity with the business, the sector, how much do investors actually think of business. Bukalapak, for example, has very strong branding in Indonesia, so it makes sense for them to be in Indonesia, right? The other thing is obviously listing requirements and where the business is, in terms of their internal systems and things like that. For example, in the US, you will need IFRS accounting, US GAAP, whereas local exchanges have their local accounting requirements. The other thing to consider then is where the business is in terms of trajectory and future use of proceeds and fundraising. So that kind of ties to the liquidity standpoint of the exchanges. And the last thing I would say then, it's where people kind of think about in terms of benchmarking and kind of comparing exchanges is really the type of governance that's required, right? In some cases, the US listing rules governance have a very different set of requirements in terms of governance, how the board is constructed versus a local listing. And then size is probably the last thing.
And that's a question that's sort of always on everyone's mind, right? I think there's always a perception that, oh, if you are listing in the US, you're going to get a much higher valuation than a local listing. And clearly that's changed a little bit with Bukalapak and these other things. And that was always sort of attributed to liquidity and people knowing, tech businesses better. Do you think that's necessarily true?
So that's why I think, for the right names, domestic listing may not be a bad thing, right? And Bukalapak was something that was, easy for investors locally to understand. They have very strong, good branding there. So obviously, it felt like demand in the local exchange was, as we all see now, and with hindsight, really, fairly strong, right? So as people kind of, maybe that is a good benchmark for as people think about domestic listing, do they have the certain attributes that kind of are similar to Bukalapak? Or, if they have a broader kind of, geographical coverage, if they are doing a lot more, that they have a more sophisticated story to tell, the US may be also kind of a venue that they can consider as well. So that's where I'm coming from is, people need to take a step back and understand really what their business is and, what are the key comps, where are the key comps, for example, trading, and how do they articulate the story, and then kind of tie that to the exchange and listing venues that make sense for them.
Got it. Well, we have Lauren back with us after a little bit of a technical issue. Hey, Lauren. We were just chatting while you were coming back around, sort of is US listing the right path and all. And I think where we sort of last had you was around, you were telling us about how you were just getting to a scale and, the size was getting global and, you're ready to take the next step. I think, we'd love to sort of pick up from there in terms of how you think from there and when you finally push the button. And since we have spoken this topic around US listing, how do you decide to push the button on a US listing?
Yeah, no, absolutely. So, I mean, it was for us the opportunity to accelerate our growth plans, accelerate our strategy. And so going IPO seems to be the right thing. Then we were faced with having to choose an exchange. And so we did our homework. We did quite a number of reviews. We spoke to a number of investors as well. We listened to feedback. Our conclusion was that, first of all, in our sector, we had more industry peers in the US. Investors felt that it was a market with more liquidity as well. At least that's the comment we gathered. Also, we had access to global investors and our story, and we were positioning TDCX as a global player, so that seemed to make sense. But what was interesting as well is that we had peers, but we had a differentiated story to play on the US markets because we were coming from Southeast Asia, a high growth region. We had a very unique proposition to these investors. And so as a result of that, we felt the US was the right place. Now, we didn't just choose the US, we also chose the NYSE, and I know Delano is here, but we believe we made the right choice. It was important to have an exchange that is so driving entrepreneurial spirit. The support you get was spectacular. So beyond the investor story, what was appealing to us was also the marketing support that the listing would provide to us. not to mention raising funds that allow us to meet the goals of growth, our organic growth strategy, but also the possibility of future down the line, the possibility of acquisitions as well.
Got it. And I will want to ask Delano about understanding the exchanges a little bit better after this. But I have one quick follow-up for you, Lauren, just on the point you said about when you went to talk to investors and around the work that you had done to bring TDCX public. Do you think that across your years there's more recognition, more understanding of South Asia right now? Like when you say, like, look, I'm based in South Asia, do people sort of, where's that on the map? Which was, I think maybe that's 5-6 years ago. Right now, this year especially, do you feel there's more, oh, South Asia, we are very excited?
Yeah, I think there was a very good feedback around it. There was a lot of interest around it. I cannot comment on 6 years ago. I didn't evaluate the opportunity at the time, but it was not at all, where is that? Singapore is part of China. We have investors who are sophisticated and they were very much in sync. They'd done their homework. They were interested in the Southeast Asia story, the potential growth. They'd seen the unicorns. They'd seen Sea Limited as an incredible success story, and they felt that TDCX had an interesting story to tell as well. And then, of course, we had the credentials. I think our track record spoke for itself, and that was also an interesting value proposition for them. It's not just a company that's promising a lot of the future, but also has a track record. At least that's the feedback we received.
Got it. That's great. It's good to know that people are moving on from like, oh, where is South Asia, which was I think 5-6 years ago, to at least right now you're focusing on the right stuff, which is the company, the track record, how well it can done, and you don't need to educate them on where we are on the map. Moving back to my questions just now that I do want to ask Delano. So, as a lot of companies here think about, oh, listing in the US, they always say, oh, listing in the US. And that's partly because if you list in, think about local listing, you list in Singapore, it's really about listing with SGX, right? When they're listing in the US, you have a number of exchanges to choose from. Can you share some color in terms of like, hey, look, what are the considerations around these and the differences?
When we normally pitch to companies, we sort of break it down into 2 steps as why a US listing makes more sense than either a local or a regional listing. And then once a case for the US has been accepted, understood, why us rather than our midtown cousins. So the case of the US, I think Andy has already pretty much mentioned all the key reasons. So investor base, the US is still by far the home of the most sophisticated institutional investors who understand technology, and the US listing is therefore the most straightforward way of accessing that investor base, which is a generally long-term shareholder base, generally speaking. Liquidity is a huge thing. Just to give a simple number, the NYSE trades about $150 billion every day. So it's a huge and deep pool of liquidity. Global profile, I think Lauren mentioned that as well. And don't underestimate the aspirational nature of the attraction of listing the US. Everyone's seen Jack Ma ring the bell at the NYSE. C obviously listed with us 4 or 5 years ago. And it's people want to follow in their footsteps. So that's all the general attractions for the US. And then the NYSE rather than NASDAQ, the way we position it is there is a profile of prestige arguments. The NYSE is still very much seen as a gold standard. So that's very attractive for issuers. That's one thing there. And then the way we trade stocks is different to NASDAQ as well. NASDAQ's a purely electronic model. Ours is a hybrid model. So we have obviously all the technology as well, but we also have humans in the trading floor as well, which is a unique feature. And the reason why we think that's important is because we think the hybrid model works better, particularly in times of stress. Those guys in the trading floor, the designated market makers, they're unique to the NYSE. They have special obligations, which means they have to make a fair and orderly market at all times. So at times of stress, they have to commit their own capital to support the stocks. So the net effect of that is volatility is dampened, everything else being equal. and spreads are tighter as well. So both issuers and investors have confidence there's the most orderly and efficient market possible for that stock. So put that combination of huge prestige as well as the best market for your stock, I think that's a very powerful value prop.
Got it. So these DMMs are guys like Citadel, right?
That's right. Yeah, there are three, and the company chooses one of them, and they are accountable to the company. So there's a very strong incentive for them to do a good job for the company.
Yep. Yep. Well, for what it's worth, Catcher Investment Corp is also listed on the NYSE, and I think part of it is because of the human element of that market making, having someone to speak to. I think that makes a difference. Yeah. Well, so maybe we'll continue on a slightly different question here. So if a company is planning to go public, so the first question that I think Lauren shared a lot of color on was, when's the right time to think about going public? It's about growth and scale and the capital to bring it to the next stage. It's really going to the next stage. And then we spoke about if you're going public, whether it should be US or a local listing. Now, if you're going on a US listing, I think especially for 2021, there's a new option that suddenly is very popular this year, whether you go down a traditional direct IPO route or a de-SPAC route. So maybe, Andy, if I could invite you to sort of comment on this, given, again, this would be a question that you get very often from companies. Yeah, as you think about, especially, say, South Asia, given the number of South Asian companies that have chosen this path, like Grab and Credivo and Property Guru, any thoughts around this for our audience?
Well, I would say I would encourage the audience to be very open-minded around, a comparison between an IPO and a SPAC. Obviously, there's historically some concerns around the SPAC product, but I think it's unnecessarily overly negative. I think people should take an open mind. And as you weigh the pros and cons, obviously, with a de-SPAC transaction, the benefits people should be thinking about is, one, you get valuation certainty up front, right? Because that's how the valuation is set up first, then you go market the pipe. Two is, I think where we see on the SPAC product, use of are fairly more flexible versus a traditional IPO where investors are focused more around the primary use of proceeds and what's driving growth with their proceeds. And the last thing I'd say that for the SPAC product, where companies can actually benefit is leveraging on the credibility and reputation of the sponsor to kind of provide, same thing, more kind of a halo effect on the company as well in terms of investors' perception. And to balance it out, then as people weigh the pros versus the cons, obviously, SPACs are one thing there's a misconception, by the way, when you think about the total SPAC process, it's not faster than a regular IPO. You still need the same requirements of being a public company, whether it be a US IPO or a de-SPAC. And I think one thing obviously to consider is the cost of the SPAC with the sponsor promote, right? So it's balancing up the pros and cons as companies think about where they are in the life cycle of the business and, accessing the capital markets that kind of make sense for them.
Got it. Delano, anything to add from your end? You get that question as well when you talk to companies?
Yeah, no, absolutely. As Andy mentioned, I think keeping an open mind is the important thing. From an exchange perspective, we're totally agnostic. It's whatever the company feels it's in their best interest to do, whether that be a traditional IPO or by the de-SPAC route. So, I mean, traditional IPO, obviously, we've got C and TDCX. The de-SPAC route, you mentioned Property Guru, which will be listing with us sometime, hopefully not in the not too distant future. So we're agnostic as far as which listing route you take.
Got it. Well, so maybe we'll continue moving on this train of thought process. So let's say we have, decided to list in the US and go down a particular sort of route, whether it's traditional IPO here. Let's talk about a traditional IPO or traditional IPO makes it sound very old-fashioned, but it's not. It's just a direct IPO. Let's talk a little bit about the process of going public and how long does it take. Perhaps, Andy, could just share some broad facts on process and timing, what people should broadly budget for?
Sure. So I take a step back, and I think the key observation, Kit, is candidly, most companies underestimate the amount of effort and time needed. Right. So, as a rule of thumb, the usual kickoff, and I say kickoff, is when you hire the bankers, the accountants, the lawyers to start all the documentation. That typically happens 6 to 8 months before, and we kind of back solve for that, right? And that includes the filings and all that stuff, and the investor marketing. The practical part of it is, my suggestion is companies should start thinking ahead of the actual 6 to 8 months and really start preparing 1 year out, 1.5 years out for the IPO, because there's a more formal kickoff where people start doing all the documentation. But if you think about the process of getting ready, right, it's much longer. And what are the key bottlenecks? Usually about getting the financial statements in place in time. Bear in mind, again, is for if it's a local company, which audit standards they want to kind of use for the filing, because same thing, US, domestic, very different accounting standards required. Second thing is probably most companies need more time to fill out their internal controls than they really think they need. And the lastly is you need a good corporate governance and kind of board in place as well to be a public company, and that takes a while. Right. So as we think, that's why I kind of harp on the fact that companies should be thinking about prepping for the IPO much earlier, because of those kind of key areas that take some time to actually develop.
Yeah, it's not just the SEC review process, right? That's what everyone always thinks about, but really there's all these other things to go through. Well, I'd love to hear from Lauren. I mean, Andy likes to talk in theory, and it sounds like, it's a bit desktop for him because he just tells people to do these things. But Lauren, you actually had to go through and work hard on all these things, right? Like with the board and getting more US GAAP people and things like that. Could you share a little bit about your journey here?
And don't say like that about Andy. He works really hard. So, but his team as well. So fantastic team. But I think the key is to have to begin with is pick the right advisors to begin with, and there's quite a few, as Andy mentioned, the bankers, the lawyers, the accountants, and so on. So that's the first probably important step, that we had to pick the right advisors. The second one is your management team ready? Well, we're never really ready for an IPO when it's the first time, but the team has to be mature enough and be cognizant of the fact that there's going to be additional work beyond their daytime job, right? So it's an extra amount of work and a commitment, not for now, but for the future as well. So that was an important point. And then the third point, I would say, that we thought of and that we are experiencing and we're going to experience moving forward now that we're quite newly public listed is the increased public scrutiny, and some of the entrepreneurs who are probably coming in maybe earlier than we have. We've been at it for 26 years, so we're fairly mature. But disclosure, more reporting takes its toll on especially the smaller organizations who are maybe a bit more entrepreneurial. At TDCX, we plan for this, and but we're also realistic that there's going to be more work to be done in disclosure, in administration, paperwork, and issuing guidance and quarterly reportings. Something to definitely take into account, and that's fine. But I usually look at it from the concept of being a teenager becoming an adult, and it's a good effort for a company to be more structured and more organized and more transparent, to pave the way for future growth, and really understand that going IPO is not the end of the journey, is the beginning of the journey, is where you start really your story. At least that's the way we interpreted it, and we went to market because we have big plans and big ambitions that the listing will enable us to fulfill. So that's my 2 cents worth.
I think that's a great statement that you just made. The listing is really the beginning. And I think all the work that you have done really sets up that foundation, that fundamental for you to take off into this next stage of the journey. And that journey, well, in the case of C Limited, there was a very long journey. And I think, yeah, that's really, I think, what public markets is about. It's about sort of powering the next stage, right? So I'm conscious on timing. We have 5 minutes left, and we do have a number of questions here from the audience. So maybe I'll address a few of this. I think the first question, I think, is definitely for Delano. So as you think about NYSE versus NASDAQ, and you think about Southeast Asia, right? Or, even NYSE and NASDAQ, or even more regional exchanges in the US, does the Southeast Asia companies, what's more, is there a particular Southeast Asia angle that makes NYSE more compatible in terms of a listing venue? I know it's a bit of a broad question, but do you think there's any sort of South Asia sort of angle that makes a difference?
Well, I mean, it definitely helps having the likes of CNT DCX already listed with us, right? So there's a proven track record there.
That's true.
Sounds a bit creepy, but true. I mean, let's not forget, I mean, 4 or 5 years ago when C listed, there hadn't been anything of size kind of coming out of Southeast Asia. Okay, that's a complete game changer. I mean, it was less than 10 billion valuation IPO. It's now 185. So that's a fantastic success story. So it could come down to something as basic as FOMO, right? Everyone's looking for the next growth story from Southeast Asia. So I'm personally talking to at least 10 to 15 companies from the region, who are looking to list in the US. And conversely, we're hearing a lot of interest from global institutional investors, particularly those in the US, looking for the next big thing. So I'm very confident that the US is a natural home for growth with scale stories from the Southeast Asia region more generally.
Very good. Is there anything on the sort of market maker side? Like, so for example, when we were thinking about NYSE, I think we love the fact that, I think Citadel in our case traded all the South Asia's, more of the South Asia SPACs, not all. Yeah. Is that an angle as well?
I mean, it helped to have expertise in the region, but I mean, this is evolving all the time anyway, right? So as more companies come to list from Southeast Asia, that regional expertise can only get more enhanced. But yeah, the DMMs, I mean, they're very excited about the next generation of companies coming from Southeast Asia as well. So it's a huge growth story all around. So it's I think everyone stands to benefit.
Got it. The next question here, and I'll probably just open it to the floor because I think everyone will have some views on it. So taking the other side of the angle, is there ever a wrong time to list, or when a listing is not recommended for a company? Is there this one thing where nope, you gotta get that done first? Any takers for the question?
Maybe I'll start first. I wouldn't say per se there's always a wrong time to list. Maybe I think experience, what are the key considerations is a couple of things, right? One, generally, to be honest, is macro conditions, right? And as far as we know, everything obviously in terms of IPO windows, listing windows, when markets are open, right? However, as the audience can remember, there were certain points in history where there are clearly market dislocations, whether it be the GFC. Those are more extreme examples. But I would say that when we plan for IPO, we plan for a certain window and we go for it. However, the things that's beyond the company's control is certain market disjointments may happen and events, and we actually generally then recommend a company to push back the IPO because investors are either focused on managing their existing portfolios, or the valuations are probably not the most constructive and supportive for the companies. That's really something I think the key that we always probably see the most in terms of reasons why companies push back the IPO. The second thing I would say is where I think then maybe not the right time is when we go get these public companies listed, they become a public company. They have, like I mentioned, and I keep harping on this, certain requirements to be a public company, whether it be audits, internal controls, governance, right? They get more scrutiny than they would have if they were a private company. And so the general advice again to companies is if they feel internally they are not ready, they're not set up, mentally they're not ready, they shouldn't rush and force IPO unnecessarily, because again, the outcome will be bad if they, for example, miss an earnings report, because they couldn't get their systems in place. That's a very negative outcome that's very difficult to recover. The last thing I would say then is around kind of bad timing and things like that is, as companies think about their business plan, again, what's the difference in a private format is you can guide people in terms of how the forward trajectory, you have a broader flexibility around what you can say around the forward guidance. And if you miss, it's a private company, less scrutiny. The other thing where we guide people around why it's not a great time is if they feel that in terms of guiding the market on a forward basis, it's very volatile, they have no clear visibility how to guide the market, and they say something that ultimately has a high probability of them not hitting their targets. And Kit, you probably know, we always call this the theory of a beat and raise.
Yep.
If they can't beat the numbers and raise the estimates, and they feel very wonky around forward guidance, they should not go out to the market. That's probably the worst outcome. Same thing, think about it this way, is the first quarter after they go public, they miss the earnings. Investors will lose confidence, and this starts a very negative and vicious cycle for the company itself that's tough to recover.
Got it. I just had, we're kind of almost out of time. We are out of time, but I do want to sort of have this one last question for Laura. When you think about this, was there one thing that you thought, like, look, I have to solve this first before I go public, or was it just a confluence of factors that came together as you sort of made that decision?
No, it's a good point, and we actually decided to delay our plans. We wanted to go in June 2020, but then we were in the smack into the pandemic, and we didn't have enough visibility as to which way things were going to go. And we decided to postpone our plans because we wanted to be in a better position to explain our story to investors. I didn't want to be in a position to say, well, yeah, we're not sure how things are going to shape up, right? Because we don't have enough visibility. So the confidence, I would say, in your story, because you know where things are going and how they're working out for you, is super important. Otherwise, you're going to be a bit shaky, and this is not what you want to be. When you go there, you want to be confident of your story, and you have some vision and a view over the next quarters to come.
Yep. When you're going out, you want to put your best foot forward. Yeah. Well, we are out of time. But time really flies when we're talking about exciting stuff. But yeah, thank you again for sharing the thoughts here, for sharing your experiences, and we are very much looking forward to TDCX's next stage of the journey and having more South Asian companies come to US public markets.
Thank you, Kit. Thank you, everyone.